What's up, guys? It's Clint Kuhns here, and in this video, we're going to talk about whether or not your LLC needs to be paying you a salary to be compliant with the IRS. All right, let's get started. Okay, so this whole thing about salary and LLCs, I mean, there's so much misinformation out there about whether or not a limited liability company needs to actually pay someone a salary. Not only whether or not they need to pay someone a salary, it's also whether or not you can even execute on that. You see, when it comes to limited liability companies, there are 4 ways in which you can treat your LLC for federal tax purposes. And it's critical you understand these because that's going to roll into whether or not a salary is even on the table. So here are the 4 ways an LLC can be treated for federal tax purposes. So if I have a limited liability company, I can elect with the IRS to treat this LLC, number 1, as a C corporation. So that means it's going to be taxed at its own tax bracket at a flat 21%. Okay. I can also elect, if I don't want to do C Corp, I can elect to treat my entity as an S corporation, okay, which is a flow-through entity, meaning the C Corp's taxed at a flat 21% on its income. With an S Corp, if the LLC has $100,000 in income, it flows down to the members of that limited liability company and will be taxed at their individual tax rates. All right, the third way to tax an LLC is a partnership. Okay, now if you're going to elect partnership tax status, then you're going to need to have another partner involved. You got to have 2 people to make a partnership. It can't just be one individual involved in this entity. Now, a partnership is also a flow-through entity as well. That is, just like the S-Corp, the $100,000 flows down as tax to the individuals that own it. And number 4, you can choose to treat it as a disregarded entity. And if you're going to go the disregarded route, well, then you can only have one owner in that limited liability company for it to be disregarded. So disregarded means that the LLC does not have to file a tax return. This one would file an 1120. This one would file an 1120S, what we call informational return. This one files a 1065. This one files no tax return. It's all down here by this person, which would be on their 1040. Okay, so does your LLC then need to pay you a salary? Well, that's the big question that comes up all the time with someone who's running a business. And what I tell you, it first depends what type of business is this LLC engaged in. So now you have to look at, is it an active business or is it a passive business? Okay, because depending on the types of activities you're engaged in, that's going to drive whether or not you need to pay yourself a salary. So what's the difference between active and passive businesses? Well, an active business is one in which typically in this LLC context, we're going to look at as something in which you're actively participating in the production of income, or you have employees who are actively participating in that production of income. So what might be an example of an active business? How about a computer supply store? Okay, that would be one. A plumber. Okay, that's an active business. So you're going out there, you're providing services to people, or you're selling products to people. Flipping real estate, that's an active business. Wholesaling, property management, real estate agents, those are all active business activities. Now, passive, what's that? That's rentals. Okay, that means that the income is not generated from your services, it's generated from the asset itself. How about if you had a trading account, all right? A brokerage account, that would be a passive, considered passive activity. So the thing about salaries, generally speaking, okay, they're only paid from entities that are engaging in active businesses, all right, where you're actively participating in that LLC. Now, if you're wondering, why is paying a salary important? Well, truth be told, I would try to avoid paying salaries unless I want to contribute to a retirement plan, because salaries, the benefit is you can take that income and contribute that income to a retirement plan and get tax deductions like an IRA or solo 401k. The drawback is you have to pay employment taxes. So for every dollar you earn, you're going to pay 15.4% employment taxes on each dollar. I don't recall what the rate is now, probably till you get up to about $150,000 or so in income, then it's going to kick down. So LLCs that are engaged in active business, we are paying a salary, you're going to be paying this extra tax here. Social Security employment taxes is what we're getting hit with. So I want to avoid it if at all possible for my LLC. So salaries are not a big thing, but in certain situations, you're going to have to pay a salary when you're engaged in active business if you're working for it. Now, so active businesses, you got to pay a salary. So once we've determined the type of active business that you're engaged in, then we needed to look at how is your LLC set up for tax purposes, okay? So if I set up an LLC that's treated as either a C-Corp or S-Corp right here, if it's taxed as one of those, then if I'm an owner in this limited liability company, it's my business, I am eligible to take a salary. Okay, so if I'm over here and I'm working for this LLC and it's a C or S corporation, I can pay myself a salary out of that company, and that salary is a deduction to the business. Okay, that works with an entity that's treated as a C or an S corporation. Now, what happens occasionally is that an individual who sets up their business is not aware of this, and I dealt with this not too long ago with someone. Their entity was not set up as a C or an S. They had a limited liability company established by their attorney, and they had it set up to be treated as a partnership for tax purposes. Now, here's where you run into problems when you try to take a salary out of a partnership. So let's assume this one's a partnership right here that we've set up, and it makes $100,000, and I pay myself a salary of $50,000. And then I pay this person a salary of $20,000, and then we take a distribution of the remaining 30. And we say, okay, well, great. I have $50,000 salary, so it's subject to 15.4%. My wife has $20,000 salary, it's subject to 15.4%. And that difference, that $30K, well, that's not subject to the 15.4% because we didn't take it out as salary. Now, this is exactly what this individual did that I was speaking with. They were paying themselves a salary for the services they were providing to the company, and then they were taking the rest of the profits as a distribution and not claiming it as active income, which is subject to that 15.4%. The problem for them is that when you're running your business as a partnership, if you work for that partnership, right? If you're actively up there doing the day-to-day to bring in the income with that grind, with the push to get that thing going, all of your income is subject to employment taxes. All of this income is active income to you, meaning that there are no distributions. There are no salaries in this context. You can't even pay yourself a salary. That's one sure way to get yourself audited. If you're an owner in an LLC that's treated as a partnership and you take a salary deduction against the LLC's income and then file it on your 1040, that's going to get you audited, because as an owner employee, you cannot take a salary from your LLC. It's all active to you. In fact, what you do is you file Schedule SE and you report all of this. It's like a Schedule C, but you report it all as active income. The same thing happens if it's a disregarded entity over here. So if you didn't have a partner and you weren't taxed as a partnership and you're running your LLC, you'll never pay yourself a salary out of the disregarded entity as well, because a disregarded entity, you're going to file Schedule C. It's all active income to you because the entity is disregarded. You're essentially, you are a sole proprietor. Yes, you have an entity, but you're still considered to be a sole proprietor in the eyes of the IRS. So when it comes to paying salaries out of limited liability companies, here's the rules. If you're an owner of the LLC and you work for the LLC to perform some services for it to generate its income, then you'll never pay a salary with these two right here, disregarded or partnership tax status. Everything flows down to you. It's all active income to you, subject to employment taxes. Now, if you want to minimize that, then your rule should be, I'm going to convert to either a C-Corp or an S-Corp to save on employment taxes. Then we can get more creative, and then we can pay yourself a salary and do other things with it. Now, on the passive side, I didn't really cover this, and meaning that, hey, it doesn't matter. It's all passive income. It's never going to be active income. Well, I can't say never, but 99% of the time will never be passive income for these statuses over here. You wouldn't be paying yourself a salary. I know this can get confusing, guys. That's why you want to make sure you're educating yourselves on how to create LLCs the right way, choosing the proper tax status. Seen a lot of mismatches before in reviewing operating agreements where someone makes an S-Corp election for their entity, their LLC, but then when you look at the operating agreement, it states that it's going to be treated as a partnership for federal tax purposes. They're audited, and the IRS comes in and they say, well, you know what? You're behind on your taxes because you're a partnership, not an S-Corp. Look at your operating agreement. Therefore, all of that income was subject to the 15.4% employment taxes, which you didn't pay because you were treating it as an S corporation and trying to minimize that. And so now you owe us back taxes, penalties, and interest. Tax court cases all over the place on that. People get dinged because they weren't setting their LLCs up correctly. But you're not going to have that problem because you're going to attend one of our tax and asset protection workshops that we teach about every other Saturday. I've got a link in the show notes below. It's completely free for you to join. You'll hear me discuss how to set up LLCs the right way from a tax perspective. And after we go through all that, my partner Toby Mathis will show you how to maximize the tax benefits you're pulling out of your limited liability company to keep your income as high as possible and your taxes as low as possible. Take care.